Welcome to TradeTheMBI.com. This report is for Monday, the 21st. Happens to be a Good Friday now. Market's taking a breather for the day, and no shock in where we were. We had the nice buy cross over here. What we were looking at is this being kind of a transitional day because we wanted to make sure you didn't see a turnaround. It could still happen with the next day, but overall, with the green this far in advance, good setup. Rising red, yeah, it happened within the death zone. The key now will be to see that move above the green line, but overall, fairly decent, and potentially now with the turnaround in the Delta V, yeah, potentially a good another solid day. And at that point, we would be able to see after the fifth day whether or not we still have positive readings. The key is to not have your high day where everything turns around going the opposite direction. That's usually what we look for in these particular cases. Particularly coming out of the death zone, you have to be just a little bit more cognizant compared to something like that starts down here and just continues to escalate with a wide spacing between them. And this is just the beginning of it, so not a surprise in any way, shape, or form. And we're looking for, look at that, with the steel continuing higher, cyan moving lower. NASDAQ a little bit behind on its move overall. It's got to get that green over and really start to turn up from a red-white standpoint, or this is just likely to collapse into a consolidation kind of period. And you can see, I mean, this has been an overall downtrend, though you're finally sealing this gap. And usually what I did was I would mark that little box right there that kind of lets you know, oh, yeah, when it moves back into it, then you can see the potential of a turnaround. But as soon as we see negative implication, definitely be encouraging buying of puts from that particular standpoint. And so some people will say to me, well, why is that still red? Well, what happened in this particular case is green crossed over here, and then the red never got above the green. I mean, above the white in this particular case for the DOC, and that's so it didn't turn it the green color. All part of the conditions I continue to add and adjust to where we get it perfect. But we knew what our overall setups were. We were very attracted to this configuration with the extreme histogram rising. And so we knew there were certain trades we wanted to take advantage of. USO, interestingly, gave the nice little pop-up signal from the other day, but look at that, the cyan moved back above. Not exactly bullish in that particular case, particularly if that steel starts to rise. Could be a problem, at least for oil. Now, this is one of the ones I look for to see whether or not the market's going to continue in its direction or not. So we would need to see that kind of flip back in reverse, create a triple spider, because you can see you got the one right here, and then it just flipped and made this tiny one, almost impossible to see, but flip back up again. So a little choppiness within that action. GLD, like I said, not a buy, still not. We have to wait for a little bit of the turnaround, still below the red line. No point in showing SLV, it's exactly the same. I also mentioned that CLF was not quite done in its attempt to get to the oversold area. It was pretty decent though, and actually the science suggests the potential for update on Monday. And it also put in a bifractal orange dot target of 1969. So that's fairly decent. So on a turnaround, that would be worth where you would want to then flip to your 78-minute chart and start to say, okay, yeah, I did get a buy down here at the very bottom of it. Looks okay, but you can still see, I mean, that is a dramatic. Let me slide this over just a fraction and grab one of these little boxes, because this goes all the way back to over here. And you can see that space. And it's easy to define it. You're just looking for the distance between that green and cyan in maintaining a downtrend. And there it is. And even when this buy came in, we could see that it was in the deep red. Not a buy in that configuration. And finally it's cleared that from that standpoint, but still hasn't closed the gap. And so when people talk to me about, well, don't I need higher time frames to see a longer term trend? No, you don't. And this is my whole point in showing it to you, so that you begin to pay attention to it, because you can see some of this on the lower time frames without needing that extra boost AIG, continuing its move, got all the way to the target that was put in from that fractal, and that target was what, 5106? What was the high? 5122, so reached it. Still had the broader one that was a little further back that still needs to be hit. Now, WLT, that was a fun one, because when we were back over here, we were looking at the positive extreme for a retest all the way down to the 774. I said 775 just to be rounding it off. So when it was up here, we were looking at the potential for next week's options. Had sold the call going for this one at the $8 strike, expecting us to come down to that 774 range. And sure enough, did that. At that particular point, was looking to create a strangle since plenty of shares of it. That wasn't the issue. And wanted to sell both the time premium of a call and a put, expecting it to just kind of trail across, and it dipped beautifully to there, so that was the opportunity to sell the put, also buy shares, expecting a turnaround. Got back up to the 8, that was the opportunity to sell the call for the $8 strikes. I think it turned out to be about 65 cents for the week of next week, and that was fine ending. No objection to it one way or another. Just keeps it simple that way. Yeah, you could have just bought the stock at the 774 and got rid of it at the $8 range. But what I like to show with this kind of a concept is that you can make just one single trade and have it last you for a week and not have to really do much with it. To me, it's irrelevant whether you get the shares or not, because even if you got them and say it finishes at 780, 790, you have the premium from the call. Yes, you would put the shares, but you can always just sell the shares that you already have. Either way, you can collect the premium, or you can add to the number of shares and then turn around and sell next week. So it all depends on where it ends up going forward, but it's an opportunity to sell quite a bit of time, money for such a low price. I mean, getting nearly 65 cents for stock under $8 is pretty good. I also gave you this one, 726, said to buy the JPM. I had a few people tell me that it was the ugliest chart they'd ever seen, and it was, but didn't change the fact that we had in this particular case decent buy coming off the deep red, made the lower low on the higher extreme, and this is where having this advanced read of the dark red would keep you out of the 779 buy, but definitely at the 726 worthwhile. And while that doesn't seem much, that's a pretty decent percent return for a little 2-day stint in a very inexpensive stock as well. So it can be done whether it's from the highfalutin or low priced. Now we get into a more advanced category here. We're looking at our PowerMo. This is the Opus 2, and an easy way to do that is you can just look at your strategy, the Opus 2, PowerMo 2, Opus 2. Someone said to me, well, what are the green numbers? Well, this is where the stop is. So the stop has now risen, and it's put itself in place and says to you, okay, 1854.75 is what it's determined as its point. Now, you'll see sometimes where a price will maybe dip below 1854.75. It relies on the close of the bar. So if the close of the bar is below that value, then it will go ahead and take the gain. But from the buy setup all the way at 1819, well, we can look at the performance report. Always fun to do. Slide that in there so you can see it. And if we, I had it expanded. Currently that trade is what, 35. So that will that get us to new equity highs? Let's go back and look. Last equity high was right there at 34. So yeah, that would take it to brand new highs on the year. We can look at our periodic returns for the beginning of just this year. So people say, well, why this one versus the daily? Well, this one just does more trades and hasn't even been converted to the new setups, which will augment our entries. And we've already been going over. And this is why I go over this chart, because I can clearly show you where there are trades that we would love to take, and then we can see where it's about to turn over, where these stops don't quite have it as tight. Actually, I can remove the ABM. Though it's fun to have it on there. It just makes it a little cleaner and easier to see. But beautiful ride. I mean, it's a pretty good run. Let's take a look at the intraday, and then I'll go through the radar screen and some of the alerts. All right, looking at the 5K chart, we can see that we had the nice run up there, and I went in and took this short as it was coming. We had positive extreme right here, and it started to roll on. I didn't get the peak price. It was somewhere right about as we were getting middle of the bar. I knew I was expecting at least the retrace to low. It had already turned pink, so I was like, well, I'll give it an opportunity to go ahead and let it change the color. Dipped all the way down, so fine from that standpoint. Put a stop above, let it roll overnight, and then we got into the deep move. But then we started to make the improvement right down here, and we literally, even before the breakout took place, we had the nice move there. We'd already gotten pretty well above the purple, so I just had to stop, tightened up, flipped around, and shot back up. Nice move back to the upside from it. And then it just proceeded to be just choppy nothingness. There were still some worthwhile trades within that. And then finally here we had this interesting flip to the red in what looked to be okay buy configuration. And even if you were suspecting that you'd have the flip, you'd have to go back to the long side. But when I get these kind of situations that seem to continue up, what I look for is the retrace will typically come down to satisfy these particularly. Didn't quite get to the dip below the red line, which is right down here for the red, but it was nice up here. Ended up with a beautiful positive extreme, and that was an easy short all the way to the end of the day. Am I looking for us to continue to come back down a little bit further? Yeah, a couple more points. I went ahead and closed it out. Wasn't worth worrying about it over the extended holiday, and obviously piece of cake on Sunday. Futures will open up, I believe, for Hong Kong, but you'll have to wait till Monday's action before anything starts up. So all in all, this is kind of a mixed choppiness, and you get that sometimes with the light holiday volume. Wasn't anything special, but it wasn't anything horrible either. Let me flip back to the alert radar screen. All right, let's scroll through some of the numbers. These are mostly the high flyers, alert stocks. A lot of them still in sell signals. Some of them had some decent runs. You expect that. You just have to go with what each of the signals are. We know that the NASDAQ had been a little weaker, so we were a little more reluctant on some of the tech views and some of the ones that just, I think we had looked at even like Apple, and that we'll take a look at them in a second. It was just sort of like bullish, but kind of just a flat read. There wasn't really any huge excitement for it. And that was the Dow. Did I do the NASDAQ already? Yeah, I did. S&P we ran through. Well, that was easy enough. Let me put up the alert stocks. There we go. So there was Apple. Off a little buy signal. It was kind of soft. Started to close that gap down. And it had a little bit of a boost coming off there. Let's go to Amazon. Again, small, starting to narrow that range, but still can't cross it. You can't cross it. That's not great. So it's still a little soft. I will have the intraday charts up too, so you can take a look at some of those. Google, we talked about that spacing was not helpful, and then started the day lower, and that was a clear sign that you could go ahead and work with that to the short side. And I think even the 15-minute chart flipped on that one all the way down to a short, and it just didn't go anywhere. Someone was asking me about Netflix. It's like, well, yes, we had the buy signal from there, and on the 15-minute chart, it was okay. We could see that it was starting to close the gap, but nowhere near there. So is this going to last? Well, it's got a lot more work to prove it. They're like, well, what do I should take my earnings? Like, you didn't really need to, because following the 15-minute alerts, you would have made plenty, both from the short setup as well as moving to the long. And in fact, if I flip this over to the 15-minute buy sell, let me see if I have that. Oh yeah, I already have it on there, so I just did discount C. So we had the deep red move, finally got out of it, but without that crossover, you don't have any sustained moves. So fine, you can get these $10, $15, $20 pops, but until that gap is narrowed and closes off. Don't want to be holding that indefinitely. This is one of those where you want to, if you're thinking long, you want to day trade it to the long side, and then as soon as we get a turnaround move, either a pivot to the upside, and sign going down is where you'd want to buy your puts for a longer run at things. Let me put the DOC back on there so you have both opportunities. That's convenient because then you can still see where the red was, but it shows a little bit of it. So PCLN, very close to that upside. Again, this is kind of what you're looking for on Netflix, where it would start to then pivot up. And if this continues to pivot up, then PCLN is going to come all the way back down. And I like going over these with you because it does give a broader sense of it. And then you can look at those 15-minute charts and say, okay, I see, how that developed and where that was coming from. Tesla, we mentioned it was going to be nothing. And it's exactly what it is. Twitter and the nice little spike. Finally, now see this one is broken above it. Nice separation. Got a little overbought. But this takes you to a situation where, hey, I'm looking for opportunities on dips to buy. Looking for upside potential. Baidu had formed a little spider, started out the morning with that. Recovered pretty well considering that was a decent turnaround. That's just a nice momentum with the red. Has moved into the new zone, so that sort of helped it out a little bit. Unfortunately, that is sort of a tilt towards the bearish side. What you would expect to see, though, would be the steel dip below the cyan, or at least the cyan continue to make its move to the upside. The FAS also broke through, so the fact that you see the deep red here, that's negated by the fact that this is now crossed over. It's just going to have to continue that run and continue to make that spread. So weakness there. It's also an opportunity to buy. So subtle variation in that, you've got some of these that are a little bit negative, but some of them are transitioning to a bullish, whereas like Facebook, nope, that's not. Still have cyan well above and a pivot up from there and down of the steel, and Facebook is going to experience further decline. So, we didn't even look at, did we look at WLT's daily? I don't think we did. Always a good one. So it had the buy crossover, but again, unfortunately, nothing too spectacular. So what that means to me is when we get pops up over 8, I'll probably turn around, close out the put side of it, leave the call side in, and then wait for that to dip back and do the same thing. But until that transitions where you get that close off, you've got to expect flat to nowhere. And look at where this has been in this range, and look at how much time premium, even though it's got this huge volatility, it's just allowed for collecting weekly pretty decent premium, given what its price tag is. So it's always a fun one to play with. And let me see if there's another one we can pop up on here. It's a little bit different, like a GS. So you can see that pop-up crossed over. That's unusual that it sold off, so that's a good opportunity. Sold that off all the way down there to turn around and sell puts into the positive side of it. Even if you get a little bit of a dip, should turn around. That would be worthwhile taking a trade like that. I like looking at those, particularly if there's something that should be bullish is given away a little bit. I like to collect the premium, particularly if I would be buying the shares normally. It's just an opportunity to capture some free money. Win? No, that's not pretty. That would be an opportunity to buy your put, looking for it to go the opposite direction. So, all in all, not bad. We've had really some good weeks going through here in April. It's been very nice to see how the developments have been pretty much spot on with that. I continue to work the programs. It's just not as fast a process as I would like it to be, but there's nothing I can do about that. I just take it one step at a time, and we'll continue to get closer and closer. And as I have updates, then I'll definitely get them out to you so that you have them. I know the Skype chat's been nice for a lot of you, and helps for clarification should you need it for some of the different trade aspects. So continue to take advantage of those opportunities, and I will be available on both that Skype chat, the private Twitter feed I pop in and out, as well as StockTwits. Trade well. We'll talk again later.